told me what to say. Oh, wow. We're streaming.
That should be big. Liz Truss told me what to say, and Boris Johnson is coming back. I think Boris Johnson is coming back, or the.
You know what would be awesome, dude? If Boris
Cat
Johnson
Turdo comes back.
No, Boris Johnson comes back with a high and tight, like Marine haircut. And he's down like 40 pounds. He's shredded. He's like, all right, I'm coming back to fucking take names and kick ass.
And party. And come back to party.
And party. We're gonna party. I got it. G is watching. Everyone, Gigi's watching. Matt, let's talk about it. But before we talk, we're gonna talk undefeated because we got college football going here. But I got to bring this in because the internet is undefeated here, Matt. And Blake Albers shares this. They call it the half court cage. We've heard of cage matches, but you got to watch this guy. First of all, how do you, by the way, the sound is, here comes the sun that you can't hear. Nicolas Cage, you got to respect anybody that's got a Nicolas Cage pillow in the house.
And wrapped in plastic.
Nothing but net.
Look at his face. Like he had tried it 6,000 times before.
I love the internet, Matt. I love the internet. But this is what we were talking about. The Marquis shares, well, that was fast. Liz Truss resigns, pound rallies after only 44 days at 10 Downing Street. Matt, when I saw this, I was reminded of 08 when we talked about it on the way in, where things were unraveling quickly, and Polson and Bernanke, they got together and they made Bank of America take over Countrywide, right? They looked at Countrywide's books and were like, well, this is going to fail for sure. But it's interesting because that was all just real estate exposure. So Bank of America took it over. Then things continued to unravel, right? And they were like, all right, somebody's got to take over Bear Stearns. And Goldman, I'm portraying this how I think it unraveled. I'm not saying this is necessarily true. Right. Goldman raised their hand and said, we'll do it. We'll take over Bear Stearns, but first we need to look at their books. So the Fed's like, all right, Bear Stearns, show them your books. They saw their books and how over-levered they were, not just in real estate, but in everything. And Goldman said, first of all, sell everybody short that we can, sell ourselves short if we can, by the way, through an intermediary. Right. And then, no, thank you, we will not take over Bear Stearns. And the rest is history. As Goldman survived, Bear Stearns and Lehman Brothers, all of them had to have a similar book, right?
Yep.
It seems to me, anyway, that's what happened. And I was reminded that when Liz Truss takes over, she's got her mandate that she says she has, whatever, and she gets even more privy to how fucked the situation is and says, you know what? I've been here for a month and a half. I'm out of here. It seems to me like she's a rat running from the ship. I don't know. That's just the first thing that came to my mind when I saw it.
I mean, you can't blame her, right? It had to be
absolutely not. Exactly. I mean, how could you blame her?
I mean, again, I think that's an accurate assessment, because I think actually what has happened is she got to see the books and she's like, nah, even what I propose, it wouldn't have a chance in hell working. So you might as well sack me now and bring in the cat on Downing Street. Yeah. Because that pussy might have a better chance than this one will. I think that's
bring up the pound. Let's look at the pound. Let's look at the pound. Why wouldn't we?
Before we look at the pound, before we do, I think this is even more important. Like, to your point, like we keep like the bonds. Look at the Ultra today. It was a new low overnight. They tried a little rally there midday, and now new low again, 127.13. I mean, I can't express again how brutal this is, but this is a daily chart that I just brought up. We were at 205 at the end of last year. We're at 127. We're talking the U.S. Treasury bonds here, right? And these things have been cut in half in 10 months, Bob.
And again, we talked about it on the way in, Matt, that it seems like there should be a flight to quality with what's going on in the world. And that has always benefited U.S. Treasuries. Like, there has to be flows of people wanting some protection, right? Yep. And they're buying treasuries and getting destroyed over the past 4 months. Had this been your tack, like, there needs to be a flight to quality here. The shit's coming unglued. Let's
Well,
buy treasuries.
here's what's
Oh.
interesting is this was the 23rd of September, which is about probably when she announced, they were buying the gilt. They were buying all the bonds they could, right? So that took that down to a new low, 103, and then it rallied back to where we started from, and that's where we are. So, I think the interesting thing is nothing has happened.
Well, it also
But
tells me
but
too
but a
that-
lot has happened.
But it also tells me too, and when I cut my teeth in commodities was in the middle 80s when bank intervention was great, like they intervened all the time.
Right.
But it didn't work over the long term. The market settles itself out. Like
Right.
you can try to intervene, but these currency markets are so giant that there's no long-term ability to do that. And my thought is, what a great opportunity that they gave you to sell the pound short again,
Right.
as it went right to where, as you just pointed out, right to where the news broke.
Mhm.
And it's the yen is another one where it's just
It's got nowhere to go but zero.
it's got nowhere to go, and they've had 30 years or at least 40
45.
years
Yeah.
of bank intervention. So maybe there's a longer runway here than we think. But you shared Alan McGinnis, some sort of check mark, said, my son has lived through 4 chancellors, 3 home secretaries, 2 prime ministers, and 2 monarchs, and he's 4 months old. So there is a lot of flux in the empire, the British Empire.
Yeah.
Of course, you can't say that word anymore. Anyway, Matt, let me share. Actually, I'm not going to share. I'm going to just bring this up, and let's talk about it right now. Undefeateds. We're down to 1, 2, 3,
9.
4, 5, 6, 7, 8, 9. 9 undies, Matt. 9 undies that have not been stained yet. Premierly clear white undies here. No skid marks on any of these teams.
Yeah, we have UCLA playing Oregon this week. Oregon is actually favored here in the home state of Oregon. Again, nobody's still giving Chip Kelly. Everybody's hating on Chip Kelly and the coach of UCLA, the former coach of Oregon. So the Ducks are favored in that game. I'm kind of surprised on that one, but again, they've been playing pretty well since they got their asses reamed by the Bulldogs. So Ohio State should stay undefeated against Iowa. Michigan is off, so they should stay undefeated. Syracuse and Clemson will cut it down to 8 for sure, because they're both undefeated, and Clemson is a 15-point favorite. I think that should be an easy win for them. And what else do I see here? That's kind of, and we'll go over some games tomorrow that we like.
Yeah, I just wanted to tease everybody that we're gonna have another parlay available for you to lose.
I mean, we were
$5
8-3 last week. Your parlay did not pay off. 8-3 or 9-3. One of those two. It was still a good. If you took all the games, you cleaned up. But yeah, it'll be interesting. This market is just not pretty right now. By the way, we're hitting new lows. The SPOOs just broke down again, another level. The bonds are rushing to, they're down another almost $2 today on the UB. There's some bludgeoning going on here, and we got 2 hours left in the day, and we're sitting on the lows of the day. Again, selling off during the lunch hours. We rallied the opening hour. They suck them in and whoosh every day. I mean, again, why do anything different but what they give you? And that's what they're giving you every day. They give you a little fake out 100 points
whether
higher.
it be overnight or the first part of the session, right?
Yeah, we went up 150 points from the open in the NASDAQ, and now we're down 240. Lows of the day.
Hey, Matt, Shy Girl shares a weak China property sector has increased the negative dollar influence on metals. Negative dollar influence meaning that as the dollar rallies, metals should benefit from that. Or is that vice versa? I don't know.
Again,
but anyway,
the only thing that matters here is when the normies wake up and realize their government has screwed them over the last 40 years. That's when you buy gold. But we're still not there. I think it'll still take another half a year.
I mean, there's been some more shares of the incredible amount of Chinese property that was built and has never been occupied It's
Right.
staggering.
Right.
Man, I read a book at least a decade ago called The Next 100 Years. And what the guy proposed was that China will be what Japan suffered by a multiple.
Yep.
As I know you're not supposed to say these things, but he said it in the book. The Asian culture does not take losses very well.
No,
It's
they
not part
don't.
of their DNA.
No.
I mean, and we were way better at that, by the way, in this country. In fact,
Because
I read a stat that,
they encourage full on cheating.
well, in the
Because
19
there is no moral high ground. with it.
yeah, but yeah, to save face at all costs is ridiculous. I mean, we had a long history of bankruptcy not being, the average person filed bankruptcy 6 times, I think I read somewhere back in 1900. Like, we're a nation of people willing to take risks, and if it didn't work, that's fine. And bankruptcy protections is actually one of the greatest things for a capitalistic entrepreneurial society. Like, listen, let the guy take a risk. If somebody puts money in and he doesn't make a go of it, he doesn't just get jailed for the rest of his life because he failed.
Mhm.
Somehow we got away from that. And 08 was the giant kick the can down the road. It's happened several times in car companies, right? In airlines, where we just protect. Nobody gets to go bankrupt.
Yeah, well, it happened in 9/11. It's almost like you could taste the guilt on the government's face for the buildings going down. Why else would you bail out the airlines?
Anyway, Matt, what does this say? I know you had an attack here. Was it FX1 copper? I mean, the building.
Yeah, no, we can talk about the Chinese. We haven't looked at it in a long time, but I wanted to look at the Chinese FXI, which is the ETF for all things China. And again, this is a 610 chart going back, about a year and a half, and you can see we're at the lows here, 23.62. Recent lows. When you look at the big picture again, this is what to me, it's just kind of the same thing as so goes FXI, so goes the bonds, right? This was February of 21, and I'll bring up the bonds after, but that was 54, 52 at that point. Now it's all the way down to 23. The low that we saw in 08 and 09 is 19. So we're all the way back there for China. China has fully reversed, fully collapsed. And if you look at those, I just want to look at the bonds just to match up the dates, just out of curiosity, right? I want to see what those, if ZB, what they did. And again, that was early 01 and 21. This should match up. I mean, I know we made this high here on the COVID news on the bonds, but early 01, we were right about here. And again, we had that little rally into the summer 167. Since then, it's just been straight down. So to me, I think the correlation here is China, their market is worth less and less and less and less. Therefore, they have to sell more and more and more of our bonds. And
I think that's
this is the war that is happening. This is the financial war, because they owned a shit pile of our treasuries, and now they're being forced to sell them under a kind of a. And I think the Fed knows this, and they're allowing this to happen. It's a way for them to kind of get the shit off their books without them having to sell necessarily. But I don't know if it'll work. It's a big game of chicken for sure, and I don't think it's gonna. I honestly don't think our U.S. bond market will ever recover from this. Quite honestly, I don't.
We shared yesterday home participation rates at levels not seen since the COVID lockdown, like when you actually couldn't go see a home if you wanted to.
Mm-hmm.
You shared 7.22% on the 30-year. I mean,
yeah, we hit 7.22 yesterday, and today, just give you an update here. Let me I'll bring those up real quick just so everybody can see those. But we're not, nothing has improved here either. We're hanging around, but I'll have you look over here. But 10-year 4.2 and the 2-year 4.6. This is another new high. So just to point out, this has not stopped going up. I keep hearing people telling me, well, the 30-year is peaking. I'm like, well, maybe 10-year is peaking. Well, maybe it keeps going higher. So again, everybody's trying to nail the top, just like they try to nail bottoms. And momentum's a funny thing, Bob. But right now,
it's like City Hall, man. You start fighting it, and
I mean, right now, yesterday they were saying this was the high. Well, now we're at 4.42. So the thing that's interesting, I think, to point out about the 4.2 is we have not seen this price in well, I'm trying to give you. I don't know if
We're
I
gonna
won't
let
be
it
able to give.
populate.
I won't be able to give it to you on this because this only started trading in 21. But let me try to just bring up the index, the TNX, so we can just kind of take a look at that. It's going to be a little laggy. It's not as accurate. It's it's got end of day pricing only, so it's not going to be totally reflective here. But you will see again that we have not seen these levels since how long?
Since 08.
This is 10. This is 08 here when we were right here at 442, and then back here in July of 07 we got as high as 5.2. So I don't know why we couldn't go back to test that. I mean, that's just the next high. So again, not a very if you're bullish bonds, this is not a good chart for you. And again, the futures continue to go higher in these products, and definitely bullish and definitely overbought, but continuing to go higher for now.
And let's face it, it can stay overbought a lot longer than you can stay solvent.
Yep.
Which brings me to this next little tweet, and we shared one yesterday. The guy responding that Tesla's down 33% in the last 3 weeks, and if you think you should sell it here, you're retarded, because apparently 33% is the limit that it can move.
Right.
This one was this scatter shows every trading day since World War II based on the S&P's percent from its 52-week high on that day and its forward performance 1 year from that day. Once you get to more than 34% below the 52-week high, 1 year later has been positive 100% of the time. And Matt, let's just talk about what the English language portends here. What he's trying to say is that it's going to be higher next year because it has been 100% of the time before, which is the most dangerous trading thought process you can have.
Especially if you're one of these guys that goes all in on that.
And I know this as a fact because, in my hog days, Matt, when I spent time in the hog and cattle complex,
yep,
there are seasonals that people track, right? And when you see a seasonal that has been 100% winner, please be careful.
Right.
I'm not saying you shouldn't be involved in it, but you better be beholden to your stops, because when 100% of the people think 100% chance of something is happening, is the time when it doesn't.
Mm-hmm.
And all these things can be true until they're not.
Mm-hmm.
I'm reminded of General Custer, and he sent somebody out to count the Indians, and obviously he didn't count 100% of the Indians as they crossed the hill. In fact, I heard that was the most accurate time the word fuck has ever been used, when he said, who the fuck counted the Indians? Because anyway, be careful out there on 100%ers. This is 100. Oh, it's a beautiful graph too. I love how the colors, it just looks gorgeous. And we're going to be higher because we have been 100% of the time when we've been 34% away from the 52-day moving average. By the way, yesterday's was 33% on Tesla.
And we also have never, and by the way, we've also never had the COVID, the 6 trillion pumped into the market. So that in itself has never happened. And this is a moment that has never happened. So to compare it to past with all those other nuances doesn't make any sense. Like, you should throw that out. It's an anomaly, but you should not be looking at this one until
Please don't trade it. Exactly.
No,
please don't trade it.
Throw it away. Just, okay, garbage.
By the way, Tesla more than 33% off now.
Well, let me bring that up. It's off 7% today down here. Again, this was yesterday. It ran up here. It was already had the rally into the earnings, right? We talked about it. It spiked up, couldn't get to the high that we saw on Tuesday. And that was 230. And again, whoosh, made a new low just barely today, right at 202, still holding that 200. So really nothing changed, right? Except for all the options boys that got sucked into paying way too much for options. Whoosh, done, gone to zero again.
And the interesting again, Matt, because they reported better earnings.
And even if you bought puts, you lost your ass. So
listen to me, they report, and this is a thread. They reported better earnings, but their revenue share was
they
way
reported
off.
better earnings, and Elon talked about buying more stock, 5-10 billions worth, and it's still not up, right? Still not up.
it's because it's going to get halved again. I mean, when you look at that chart, when I look at that chart, it's a giant bracket, and giant brackets beget giant corrections. That's all I got to say.
Mhm. It's
That
not
is
looking pretty.
that is a meme stock is what it's turning into.
Yep.
What else do we have here to chitter chatter about? Hold on a second. I got to get back to the broadcaster. Definitely broadcasting here. Matt, yeah, let me share again because I want to go back to Twitter. And I need to share this.
Existing home sales were down to 4.7 million adjusted in September, so that continues to go down lower. Again, there are no bids in housing. Prices still have not even begun to adjust there.
Matt,
So,
you shared this, and I want to just bring it up here because it's a better look.
Yep.
We can see it better.
Yep.
The Real Fly shares biggest losers year to date with market caps over 100 billion. These are cash generating cows getting decimated. Bidless Biden's debacle. Meta, Nvidia, Netflix, Intel, Adobe, Taiwan Semiconductors. We've talked about several of these over the past months for sure. Is there one there that we haven't really?
Yeah, I want to talk about Baba just because we had that China theme going on here, and
okay,
this has always been the savior for Chinese stock investors, and we're making a new low there. So I'm just going to bring that up just so you can see that this thing has been just absolutely, again, if you thought back here in the fall, 140 was a good deal, and then it rallied to 180 and you didn't take profits. Well, now you're back down to 72.51. And again, another freshening low here. 71.55 was seen today. Maybe we're near the bottom. I don't know about. Maybe we are, but on a monthly chart here, full round trip, from the time this baby came public. So again, if you were fortunate enough to buy it here on public day when it came public at 91, you're now underwater 20%. If you did not ring the register for 3.5x up here, well, then I can't help you. But this thing, again, if China is falling apart as we're suggesting and the wheels are coming off, why would this thing not continue to break and at least test this old low of $58, $59? Got to test that probably, maybe, possibly. But again, nothing here looks like a buy to me. Nothing here. I wouldn't buy this with Lee's money. I would not buy this with Lee's money.
Or Mother Teresa's. Mark is asking about the real estate market. I gotta, and we've both been saying.
Here's the deal with the real estate market.
You have to.
If you can find a buyer and you want to sell, then you better price it way below the market and get somebody to come in who still thinks I'm just waiting for a bargain, and that might be 10 or 20%. You might get lucky with that person coming in, especially in a town that people want to live in, right? So if you're real estate's always local, yada yada, but
no, but that's because a lot of people don't think about it that way. Like, if you want to sell, first of all, if you have to sell, the smartest thing is to just offer it at 20% below, where everybody's like, look at this idiot puking.
Yeah,
that used to happen all the time in the pit, in the trading pit, where somebody said, you know what, I want out, just get me out. And the way you executed that order was shock everybody with a bid or an offer that seems ridiculous. And the whole pit charges you and grabs it. And then everybody looks at each other like, wait a second, what do they know? Why did we just do that? It seemed like such a great trade.
Right.
And in real estate, especially, because if you just try to finesse the market in the conditions that we have here and now, and here's a little good example of it. I was upside down terribly in a house in the 08 area time frame, and the bank wouldn't take the short sale offers that we brought to them. All right, we brought two offers. Let me think. I think of this pricing: 380,000, 387,000. The bank declined both of them. Right? They took the house. They sold it a year later for 337,000. So the geniuses at the bank, wouldn't accept that deep discount that was brought to them. And they
Except
held
the
on to it.
banker, except the banker bought it himself.
Possibly. It's just so real estate in particular, man. If you want out,
It's, I mean, you can't, it's almost as, I mean, even Bitcoin is more liquid than real estate.
for sure, 100%. I'm just saying, if that house if another house comparable in your area is on for 520, offer your house at 490. Just offer it. Sell it in a week.
Right.
Who gives a shit?
Hey, by the way, I don't know if you saw this, but since we're talking sports a little bit here, Kevin Durant picked up an expansion pickleball franchise. I know you were in a bidding war with him.
No, wait a second. So who was the original pro athlete? Was it Drew Brees? Who was it that was in the pickleball franchisee business? We covered it several months ago. Somebody.
I know. I don't remember. Anyway, so he bought and LeBron. He's just keeping up with LeBron. LeBron already owns an MLP expansion team alongside Maverick Carter, Draymond Green, Kevin Love, Tom Brady, Kim Clijsters. They all own, and in this ownership group, another team last week. And then Drew Brees and James Blake are investors in the league coming back to you. So I'm just getting through this article, and that's what it's talking about. So the league was founded in COVID 2021 and has gone from 12 to 16 teams, Bob, and doubling its annual events to 6. Prize money next year surpassing $2 million. So I think you're giving up hope on your pickleball career a little soon. There's some money out there.
I hate it. I hate pickleball. I hate it. I'll say it.
The thing that's funny about it is, here's what's funny about it is they can't make tennis work. How the hell do you think you're going to make pickleball work?
Well, here's the difference though. Tennis, like everything else, is really suffering like hockey from diversity. Because there's not
lack of diversity.
Lack of diversity, because there's not a lot of country clubs in the hood where your kid gets to go to the country club and play tennis.
Mm-hmm.
Pickleball, maybe that's their tack. Maybe they're going to make pickleball great. It's the stupidest sport ever. I hate it. When people ask me to play pickleball, I say, can we need to add at least one thing or two things. Like there has to be at least a giant bong rip, or maybe you need to chug a beer between games to make pickleball interesting. Badminton is interesting. Pickleball is not. All right, let's make badminton great again. I don't know. The news, it's just more ridiculous every day as the NHL admitting that they have a problem.
The figurehead was admitting they had the problem, and the NFL came out today and apologized that they have too many white people too. So there you go. I guess the demographics are what they are. I think white people are still the majority, but that's just how it is in this country right now. So I don't get it. But when I read the thing, I'm like, where's the Hispanic caucus? Because they for sure are not represented in the NHL. Right? Where's the Indian caucus? How many Indians do you know that play hockey? I'm not sure there are any. There needs to be a Cuban delegation. I mean, at least they had a bobsled team, did they not? Jamaica did. I don't know about
Jamaica, very unrepresented in the NHL. And it's a travesty, and something needs to be done. Make Jamaican hockey great again. Maybe that's something that we could.
Well, maybe they need to make a Disney movie on Jamaican hockey. That's usually sometimes all it takes is Disney.
In fact, the other thing that's not
Disney needs something besides gender bending. Anyway,
wait a second. It's cartoon characters. How come there are no cartoon characters in hockey? And why hasn't there been a cartoon character hockey movie?
Good point.
More importantly,
good point.
There's just so many things that we could reminisce on here that it's. Anyway, all right, Matt.
Speaking of hockey, the Red Wings are off to a fast and furious start.
I know you said that. That's why I wanted to talk hockey. What are they still undie? Are they part of the NCAA?
They are undefeated. They lost in an overtime, which is considered not a loss. It's considered a tie, which you get a point for. So they lost in the overtime, but they still get a point. So they're 2-0-1. And next game coming up, actually, let's see, is tomorrow against your Blackhawks. Tomorrow against your Blackhawks at Chicago.
Maybe we'll have to go enjoy that game over a beverage.
5:30 start. I'm sure we can watch it while we're watching the real thing, which is the Padres game 3 against the Phils. Great game.
Let's talk a little MLB. So you were dead on betting pitcher. You know, they talk about pitchers and batters. You bet pitchers just like you bet jockeys.
Yes.
In the horse racket.
Yes.
You bet the pitcher is the jockey. And
Correct.
you nailed it yesterday. Verlander, I mean, he was ridiculous. What, 11
I mean,
strikeouts?
it's like betting against Tom Brady in the Super Bowl at 40 years old. You can't do that. You're going to lose. Now I would give you even money that Tom's going to quit because this team in Tampa Bay sucks so bad this year, and his marriage.
Do you think he'll do the
I
UK
do. I think he's
Prime
going to do. I
Minister
think he's
thing?
going to do the reversal of the reversal of the reversal. I do. Yep.
I think maybe he does the UK Prime Minister thing and just fakes.
He's going to quit. I mean, the team sucks. He's got no, and he's got good weapons around him, but they're playing like nobody cares because they don't.
All right, we got the bet of the year coming up tonight. As Thursday Night Football has underperformed every week. So fresh out of our algo-driven sports modeling computer is the under in tonight's Thursday Night Football game. As Thursday Night Football has been so pathetic that we are trend players, and we're going to stick with that. The under. And don't watch it, by the way. As a matter of fact,
yeah, just turn it on tomorrow morning. You're not going to miss anything.
A better bet would be the people that watch on Amazon Prime, the actual number of viewers on Amazon Prime tonight,
Correct.
Because I think it's trending to 0.
I think you're pretty much spot on with that call.
All right, what else can we look at price discovery wise? And you know what? Let me just look at one thing here.
Well, here I'm going to just show you what's going on. While we've been talking here for the last 30 minutes or so, but all we've done is, again, we had a ladder day. The ladder day lasted all of about an hour and a half ish, and then whoosh, whoosh, whoosh.
All
whoosh.
Assets, Matt, are
one. I mean, these bonds are leading though. Look at this, down another 2. Like, you got to look at this like just from an hourly. Like, look at the hourlies just being stretched from moving averages, just getting bludgeoned. I mean, look, this is an hourly chart on the ultras here. So this means on Monday we were at 133. 6 handles, Bob. 6 handles in 4 days.
I mean, it's seriously.
And actually, we were a little higher. I mean, this is a Sunday Open. The Sunday Open is so we've gone from 134. All the way down to 127.
That's 1,000 a handle in the
1,000 a handle per contract. So you got one contract, you're down $7,000.
Yes, yeah, and if you were a sovereign or a hedge fund or a high net, and you were like the nuclear war is coming, I need a flight to safety, and you bought bonds at 134.
Yep.
You still get the interest that they're going to pay you there, but your coupon is
and again,
the coupon is there, but the value of the bond is just
3670 is kind of the line in the sand here. If they can't hold here, we're going to go back and test 3600 again. I mean, this 35 to 3700 is just wicked whippy right now, right?
Oh, now I have something on my phone that says important call. Like most of my other calls aren't important.
Interesting. Your secretary must really like this one.
Important call. They say, scam call probably, but now I'm getting an important call.
Right.
Important call. Yeah, I know. I'm going to get rid of him. Yes, share. All right, Matt, back to standard deviation nuance and fighting the slope, which is like fighting City Hall. And I said it, 37.10 was that momentum level. Got to close the week above 37.10, and I'll start to change my opinion. That would be less unhealthy in this market and in this time frame. This is the weekly.
Mm-hmm.
They got above it, but it sure doesn't look like they're going to be able to defend the level. I mean, obviously they could. We could rally tomorrow. I'm not counting that out. But this thing looks particularly scary to me if you're hanging on to the long side because I actually think this candle goes fully red. I think we end up lower on the week, lower from the open, and take out, last week's open also, or last week's close to put us lower on the week. Last week closed, if you remember, at 35.97.50. 35. I think this thing looks terrible, man. It looks absolutely terrible. 100% of the time.
However, I'm going to give you a not so fast Lee
Please
Corso
do.
here, because we're not there yet. So this is where you need to pull back a little bit. And to your point, here's your weekly close last week, 3,600, let's just call it. And same thing on the NASDAQ, 10,788. So we're still 300 points above that on the NASDAQ. And we're a solid 100 points, really above it, 70 points here on the SPOOs. So I don't know, Bob. I mean, again, you can see we're holding right here. We're holding the big value zone in both these. So 70 is the line in the sand. We're going to have to close under here by noon, which is, another 45 minutes. We got 2 hours left on the trading day. And who knows? Kick save, yes or no? Now's the time to place your bets. Like, place your bets here at 36.70. You got long already. You're up 4. You move your stop to 0 and let it ride. I think, Matt, I think that might be the play here, honestly.
Yeah. The economic calendar is going to deliver absolutely nothing for you tomorrow.
Nothing.
So there's nothing on the calendar other than these.
Well, we have what do we have today? We had 1, 2, 3, 4 Fed heads, and they're all done talking, or pretty much done now. Tomorrow we have another Fed head in the morning, and then we got the federal budget balance. Nothing's ever been balanced about the budget, so that's a non-entity.
That is actually what they call an oxymoron.
Right. And then as we come in and then we wrap up the month next, basically we have 5, 6, 7 trading days left, because Monday is the 31st. It's a spooky Halloween, Bob. I don't know, again, this is a difficult traders market, and it's only a traders market, but it's a difficult traders market. I'm seeing a lot of people just struggling with it that are been around this game like myself for 35 years. I've been telling you, I've been doing like 1 trade a day, and I tell you in the morning when I do it. And then after that, I'm like done. I'm like, I'm not going to be greedy in a market like this. I'm going to take what it gives me, take advantage of it. Today I actually did play the downside because it's set up also. So I got the upside and the downside, but that has not been the case. I've been doing like 1 trade a day. So the volatility has been real slow. And I think you have to, again, understand what type of market you're in to know how to behave in that market. And, in a market like this, it's okay to make a little bit of money and maybe scale your size down considerably, but you're still getting paid. And it's a lot easier and a lot less stressful to try to predict which way the next major move is going to come right now until we have more information. I just don't see that information showing itself right now. So I'm not going to guess because I don't know. I don't have an edge in here.
Right on. All right. The Philly Fed Manufacturing Index came out down 8.7. They're expecting it to be down 0.5 or 5. Just like the Tesla report, things are holding, but there's starting to be some serious cracks going on here. And we keep talking about it. Like, when the bad news really starts to hit, I'm not sure that a year is long enough for us to recapture that first this graphic here that's still behind me. I'm not sure.
But it's all Trump's fault. Everything that's happening is all Trump's fault.
Of course it is, including my golf swing. All right, Matt, thank you very much. Tomorrow we're going to cover those undefeated NCAA football matchups to see who stays undie. We're going to cover those and give our Matt's going to give his predictions. I'm terrible at any kind of sports gambling. And we will see if there is an NFL game that has more of a 10-point favorite. You know how we run those, how we play it. That's the only way we play the NFL. Anyway, that's what we got. Please join us at marketvitals.io. That's our community. Please share, retweet, and plagiarize. Matt, 600 views from yesterday's show. 600. The 600. We need to get that to 6,000. So seriously, please retweet this shit. I don't give a shit about likes. All right. I don't need to be liked. I need to be retweeted.
By the way,
And,
the only game that's lining up for us again happens to be, our boy Tommy Brady against Charlotte, since they're so bad, Carolina Panthers. So they're 10.5-point favorites. So place your bet if you want to get on it, because Tommy Boy needs a win. His team sucks, and they're fraying.
And amazingly, his team sucks, and they're still a 10-point favorite, to show you how bad Carolina must be.
They're horrible. They're super horrible. And the game of shoots and ladders continues today, as we're just, dripping off lower. Again, it's either all up or all down. All or nothing market continues, which, again, if you're a trader, there's opportunities. But if you're not, take a break, step away from the console, whatever it takes.
Just walk away. All right, Matt.
But again, I'll be interested to see how this closes today and tomorrow on the weekend. Again, are we gonna have a doomsday close again on Friday?
There has been very little nuclear war chatter this week compared to weeks before. In my feed, anyway.
Well,
that's what I'm seeing.
It's pretty easy to turn it off when it's all saber rattling all the time. But it will be interesting. Again, I think harbinger for future earnings. I mean, basically after this week, we're 20% through with the S&P 500 earnings. So keep that in mind. Don't, that this is going on, and I'll be curious to see, next week is really the big earnings week with Amazon, et cetera. Those are the ones that, most people.
Matt, I saw a tweet today, and let me give an update on this spread that I talked about either at the end of last week or the beginning of this week. I can't remember. And that is the intercommodity spread, Nov beans, Dees corn. And the thing that I saw was, I guess China needs more beans than corn. Understand this: China has obviously a lot of mouths to feed, and they can't possibly fulfill all their calorie needs at home, right? So they buy a giant amount of grain. I highlighted the spread and said, I really think that this looks like it wants to go back to where it's traded for the longest period of time there before any of this nonsense started. And that's between, 480 and 560. That bracket from 2019 through 2021. There's a line in the sand here, though, for me. I said 720. It shouldn't get back above 720 and re-enter this bracket here that we bracketed in, 713 to like 850 area. And whatever this news is out of China needing more beans than corn is driving this story. But I still like this trade. And I still like it as long as we can stay below this bracket. 717 to 720, beans over corn. So I like reaffirming the sell here, and your stop is clear and tight. It really shouldn't trade back towards like 730 on this intercommodity spread. Just wanted to share an update because, and I don't know, we've been talking China today, and that was for sure in my grain traders feed.
Yeah, that's good information.
China needing more beans than corn. Anyway.
Well, and the only real tech name, and I lightly say tech, is Snapchat coming out after the market today. Their last earnings were not received so well, and we really haven't done anything since this happened 3 months ago. So we traded all the way as low as 878. Probably they warned on late August there, and now here we are at 1067, down 2% into the earnings today. Hey, maybe you put a bid in at 950 and you put your stop in at 850. There's your risk. If you want to take a trade like this, maybe that's what you do on something like this. Or you could buy some calls that will probably achieve the same thing for you if you want to look at something like that. Because again, we've spent 3 months. Maybe we'll get just a surprise upside here. This isn't going up necessarily, but it is up from, it's up $2 from the low. So it's not cheap here. But maybe you could pick up some, 850 calls in the money for basically the next week expiration. I wouldn't spend too much more than that on this trade if you wanted to do something like that. And
they're reporting today.
They're reporting after the market closes at 4 p.m. Eastern.
Right on.
And again,
All
they're
right, Matt.
expecting, just so people know, they're expecting to lose 24 cents. Revenues of about 1.14 billion expected. I still can't believe people spend 5.5 billion advertising on Snapchat, but in fact they do. So it shows you how big these advertising markets are.
Bingo. All right, Matt. Thank you. Thank you, Lee. Thank you, Mark.
And Bob is still not. On Snap or TikTok for Market Vitals.
I just can't do it. Although we shared the TikTok video today of the Nicolas Cage fan club.
Right.
Like, you are living your life right and rich in my book if you got a Nicolas Cage face pillow. I mean, that is some good living. And man, did it look like it had a little bit of wear. Another thing that I wonder is how many takes. Like, first of all, for me, it would be.
I'd say he was easily over 1,000 just getting the donut thing to go.
That's what I'm saying. How do you keep a donut without Velcro? I don't get it.
Yeah.
I don't get it. You're CGI. All right, Matt. Thank you.
Bobby, as always, great show. And we'll be back here tomorrow for the Friday version.
Right on.